morning, everyone. My name is Germans, and welcome to the Future Leaders session on practical uses of digital assets in transaction banking. The digital asset topic is important and widely discussed at the moment. It's featured in almost every conversation at BAFT. We're 8 practitioners from 8 different institutions, and over the last 5 to 6 months, we've done one thing: cut through the noise. One paper, one question. What do digital assets really mean for transaction banking? Not just in theory, but in practice, in client outcomes. We went deep on research, interviewed industry experts, and surveyed institutions represented in this room. What we'll share today and in our paper is where do we see the value add, where do barriers still exist, and where banks can act with confidence right now. We will start with a short video introduction of our team, and then I'll hand over to my colleague Nico, who will walk you through what our research has revealed. With that, Nico, over to you.
Thank you, Germans. Good morning, everyone. I don't know if you've noticed, but in the last 2 days, digital asset was mentioned in almost every panel, even though it was not the topic. So we can certainly say digital assets are here to stay. And what I want to do is I want to provide 3 things to you that are our general findings within our paper. And the first one is quite a baseline. I mean, we have heard this before as well. Stablecoins and tokenized deposits are not the same. They serve different purposes and they have different advantages and disadvantages. And institutions that understand this by heart and act properly on that will have an advantage on the rest of the pack. The second thing is a very important one, and especially in this room, since we have a lot of correspondence banks in here, digital assets will not replace correspondence banking in the foreseeable future, but it will reshape how correspondence banking will be made. And if you engage in this reshaping process as an institution, you can influence how the process will look like and how the legislation will look like. If you do not engage in this reshaping process, you will have to adapt to processes that have been defined by your competitors. And the third thing I want to tell you is the industry tried to digitize trade finance, as we have heard before in different panels, and up until now they always failed. But this was not due to the technology itself, it was due to a lack of coordination and legislation. But we are now on a changing point because the first legislations have been set in place to use digital assets within the trade finance space. And with that, I want to hand over to my colleague Tom. He will provide a few hard facts on digital assets for you.
Thanks, Nico, and good morning, everyone. So I wanted to spend a couple of minutes just setting the scene here with the reality and challenges that are already upon us in transaction banking today around the digital assets topic. So first off, 27 trillion US dollars. That represents the amount of money that's trapped in Nostro-Vostro accounts globally right now. That's an enormous amount of money, and it's money that could be invested in a far more productive way. And that creates a very high opportunity cost for banks. And this is one of the key things that we discuss in our paper, is that the true cost of cross-border payments is very closely tied to liquidity timing. Second, we have regulation, which is a very important topic when it comes to digital assets, but there are now more than 10 major jurisdictions with digital asset frameworks in place. So everyone will be aware of MiCA and the Genius Act, but there are also frameworks in the UK, Singapore, Japan, and parts of the Middle East as well. So what does this mean? It means that the argument that many banks have had where they say we're going to wait for regulatory clarity or just see what happens is now in effect past. Third, we have the global trade finance gap, which is estimated around 1.5 trillion US dollars. That's unmet demand every year for real clients and real transactions. So there's clearly not a lack of demand and trade activity, but there are persistent challenges that exist. And our paper explores these challenges and how digital assets can combat them. Fourth, we have central bank. There are now over 10 wholesale central bank pilot cases that are live that are trying to tackle the same challenges that we're all experiencing, the pain points that we have on a day-to-day in transaction banking. And this just really shows that central banks are moving towards, headfirst, to digital assets. And I think one really powerful fact is stablecoins. The volume in stablecoins now outweighs that of the traditional card networks. So all in all, this is what our paper is exploring. It's looking at the opportunities that exist in digital assets if we get this right, but also the risk if we recreate fragmentation, but simply in a digital form. I think with that, I'll hand over to Tyler to go through our survey results.
Yeah, so in addition to our research, we also wanted to hear from practitioners on the front lines of this transformation in digital assets. We put out a survey and received responses from practitioners and institutions from North America, Europe, and Asia. The results were quite compelling. 78% of practitioners said that their institutions either have or are developing a digital asset strategy, while 80% say they plan to increase investment over the next 24 months. You might say, well, of course, the industry is mobilizing. But the next stat is what got us really excited. 50%, or half the respondents, said that their institutions are already running pilots or proof of concepts for digital assets. That's moving beyond mobilization. That's moving towards transformation and solutioning. The biggest barriers that the practitioners referenced are probably not surprising. Regulatory uncertainty, risk and compliance concerns, and tech integration complexity. These are barriers that we've overcome before in transaction banking, and we can again. Our paper explores this in detail, what it's going to take for institutions to move past these barriers to really recognize the scale of digital assets. What we're hearing as our top priority use cases for the practitioners based on our survey is that stablecoin cross-border payments followed by tokenized deposits for settlement are the out-of-the-gate use cases that people are pursuing, with more on their way. I'm going to hand it over to Dana now to talk a little bit more detail about what some of those use cases are.
Thank you, Tyler. So while we were examining the use cases for digital assets in transaction banking, we determined 4 key areas where digital assets could solve for real-world pain points. Number 1, that Tom had already mentioned, is the need for pre-funding Nostro accounts. Today, $27 trillion sits overnight in Nostro accounts to pre-fund future payments. With digital assets, we can remove this need for pre-funding, move to 24/7 settlement, and near real-time FX. This would save banks billions annually. And we can follow the same methodology for tokenized collateral, unlocking same-day substitution through atomic DVP, ultimately saving time, money, and reducing settlement risk. Industry projects like Project Helvetia are already working to achieve this through distributed ledger technology and wholesale CBDCs. Now I'll turn it over to Max for points 3 and 4.
Thanks, Dana. On to Treasury. Now, when we think about Treasury, 2 things come to mind: visibility and control. Today, treasurers most often face difficulty whether it's having delayed or fragmented views across entities and currencies. And this is where we feel programmable settlement assets can come into play. This would enable real-time visibility, automated and/or conditional movement of funds. Now, in a very controlled environment today, this is already deployable. The question then is, how quickly can we scale beyond that? And if Treasury is about visibility and control, when we think about trade, it is often, but not always the case, it's often about documents. And one such document is the bill of lading. We know that the bill of lading is physical document in most corridors. Now, this process can take anywhere between 5 to 7 days, involving courier, manual checks, and reconciliation risks. Now, what has changed is not the technology, but is the underlying legal layer. So frameworks such as the ICC-EUCP, the Electronic Trade Documents Act, UN's Model Law on Electronic Transferable Records, just to name a few, they are in place. Effectively, what this means is that an e-bill of lading can compress these cycles from days to hours with better data integrity and lower fraud risk. Now, in closing, I would like to say that this paper goes way deeper into what these will look like in practice. This paper addresses the real questions such as legal alignment and industry collaboration. This paper goes into where digital assets can create real value today. And with that, I'll open the floor for some Q&A by Sergey and David.
Thank you, Max. Thank you, team. I've been watching the questions coming in, and I will take the one about the regulation because I think it's a very important one to address. And because tokenization is not just a technology change, it's also a legal and economic transformation. It's about how we align technology capabilities to legal certainty. And what our paper finds is that frameworks like MiCA in European Union and Genius Act here in the US, they've changed the conversation completely. They've moved the dial now from the technology conversation to how we can roll out those instruments in a controlled and a supervised environment. And I think that's a very important development that just happened. And I see there is one question about trade finance on the screen as well. And I think David is
Thank you,
take
Sergey.
this one.
So let me read it out loud. So in the first wave of DLT trade finance, platforms have struggled to scale. What still needs to happen for digital assets to truly transform the economics of trade finance? So this is a very good question. So what we've seen in the past is first blockchain solutions for trade finance, such as WeTrade, TradeLens, Contour, and others. They struggled to scale basically because of client adoption. The regulation was not as developed as is today, which slowed down implementation times. But as my colleagues covered, right, governments have stepped in, regulation has advanced extremely well. So now we have an opportunity ahead, right? We are in a situation where we could have real-time trade finance. We could be financing transactions the moment a bill of lading is issued, transfers of title is executed. And that's where the real economics for banks will come in, right? Reducing friction, getting funding on the right timing, efficiency overall, right? But we need to be honest, the bottlenecks have not all been solved. They just have shifted, right? So while regulation has advanced, we still have interoperability. And has been mentioned today previously, right? What we mean with interoperability is that trade finance by definition is a multi-party business, right? So we have corporates, we have the commercial counterparties, we have banks, of course, but we also have carriers, we also have insurers. So until everyone can jump in the same digital framework, we're not going to have real scalable solutions, right? And that's why we believe the work that BAFT is doing is so important, right? Giving visibility, aligning on the conversations, getting all the industry aligned on digitalization. And we really believe the industry has an opportunity here, right? We need to take action, we need to step in, we need to keep the conversation going. And that's what our paper tends to do, right? It's a practical view on digitalization, both in trade and payments. So we encourage you all to read the paper, draw your own conclusions, engage with us, of course. But we believe digitalization will only happen if it happens as a whole and the whole industry reacts. So we are running out of time. So round of applause to my team and thank you all for your time.